Good day, traders. I trust you are well. Pretty excited about taking some of you through the AVZ of trading, the asset valuation zones of trading, concept that I've developed over the past 18 months. Never heard of it, never seen it anywhere, but it's absolutely brilliant. Filters out all low probability trades from the way that you used to trade. And the beautiful thing is, it has revealed to me three beautiful trades, strategies that I'm going to be teaching you. I call them profit booster because there's a very high probability of hitting one-to-one when this sets up correctly. Now, I know you haven't gone through the course yet. Some of you have, but some haven't. But I'm going to just share some snippets of the asset valuation zones and just explain to you why I took this trade. You can see the trades here. That was the first entry I got out here, and that was the second entry on that trade. Now, we always indicate the high of yesterday, the low of yesterday. These are the levels that I put in here, which I'll talk to you about in the course. But the most important thing to bear in mind, the whole concept of asset valuation zones, is that I've discovered the market is just like people in a boardroom, right? We want to buy an asset, and our accountants come to us and present different valuations, and we base our decisions based on that. So looking at DAX, German 40. Now, here's the beautiful thing. I've got 9 markets on my watch list, and I've got 4 indexes, 2 American indexes. Then I've got the DAX, I've got the UK 100, I've got gold, and I've also got 4 currency pairs on it. There's different strategies that I use at different ones, but when I'm trading the open, one of the profit boosters, if it sets up, you have to take it. There's a high probability you get one-to-one. That's what happened today. Now, the beauty of it, if you've walked the journey with me, you're gonna love this. All we're interested in is how the market is valuing the asset. So yesterday, Friday, with the high of yesterday, okay, high of Friday. Now this is high of yesterday, low of yesterday. When the day ended, the market, the institutional traders, the large traders, the finance people had presented and agreed that the highest value of this asset is up here and the lowest is down here. Then all we got to do is, because we don't know who did that, right, on Friday, but we know that today we're going to have large institutions coming in for whatever reason, banks, countries, fund managers, it doesn't matter. They're all going to be coming and say, but hang on a second, this asset is now too highly valued, so we have to drop the price to the correct valuation, or the price, the asset is not valued quite where it should be, so it's cheap. So we've got to buy and push up the price. Now, at the open, we expect a lot of drama. Now, I came into the market about here. I am trading the open. That was the first candle. Now, I just look to the left. Okay, I've got the upper asset valuation zone, which is within here. I've got the lower asset valuation zone there. I've got the midpoint, which I'm not talking about at the moment. And all I'm interested in is not micro detail analysis of price action. I just want to see what the market has said concerning the value by the time I come in. The bulls tried. At that point, the bulls said, well, it's too low. Let's push it up and see if we can get higher price valuation, higher than the high of Friday. They failed. They tried again here. See how long? It doesn't take me that long to have a look at it. They tried again a few times in here. So by the time I'm getting to the open, I'm opening my charts to say, okay, I'm going to trade the London Open. And I see this, and I say, okay, the bulls definitely say it's somewhere within here. This asset is too cheap. Let's buy. And they got to test the high of the Asian session. They had the opportunity to crackle through above that and go for higher values, but they failed. The bears came in strongly. So now I'm saying to myself, if I see at the open confirmation that this asset is too expensive, I'm going to sell. Now, guys, I'm off the 15-minute chart. I have stopped trading the 5 minutes since I did complete the AVZ process at the review of my strategies and came up with the asset valuation zones. I don't have to. I'm finding beautiful, easy to trade opportunities on the 15, and boom, just bank it. So first candle, that was the first candle on the 15. Now with the hindsight, not with the hindsight, with the knowledge of the asset valuation zones, as it opened, just before it opened, my mind was pretty clear. If the bulls were the strongest institutional players at the open, they're going to keep pushing to get this asset up to higher values. They're going to go through, they have to blast through the high of yesterday, because you will see when I take it through the course, the upper valuation zone is a sell zone I'm looking for to sell. Okay. And if the bears are strong, they're going to fight completely to reject that, because the bears are going to be saying, hang on a second, this thing is not cheap. This thing is actually very highly priced. So we need to drop it until it gets to zero. We just need to push this price down, all the way down, and get it to the correct price. So I'm watching this, it opens, I'm saying, okay, fantastic. As it begins to go through that, I get myself ready to say, if I close on the low of the trend candle with no tails, I have to sell. Because now this is one of my profit booster strategies. It should give me, with a high degree of confidence, a 1-to-1 return. Nothing's ever perfect, but that's why we put a stop in the market. So there I am, and I'm saying, okay, if that's going to happen, let's have a look. One of the things I'm going to remind you of, if I don't have at least a 1 times risk reward on the original trade, the initial trade, I don't want to take it, right, to key levels. Key level is within the lower asset valuation zone, which is a buy zone. Talk a lot more about that when we get to the course. But the 1-to-1 is just above that, and that's fantastic. The bears can get to that. If the bears are strong, we manage our trades and we just continue them as a drop through to, as a push the price to zero. Okay, so I took that profit booster. This is actually profit booster number 3, one of the new strategies that I've got. Everything is set up. There are things that I'll talk to you about, in terms of what goes into the setting up of it. But I sold here, put my stop there, and our trade management rules. You must watch the risk management video that I've just sent through. As soon as it starts to move, 50% is a fair place to put your stop. It's a technical level. When it was closing down here, I'm already in the trade that's going to get 1-to-1. So now I'm thinking of scaling in. The only thing I'm interested in is, do I have sufficient room for me to be able to manage my trade before it gets to a place where bears are likely to come in? Now, that is just closed there. It's a beautiful trend candle. I'm happy to take it. The reason is, I look at that candle, I said, okay, if I just look at that candle itself, let me move this a little bit here. If I look at that candle itself, it's closing here. I can pull my stop down on the first trade down to here. Okay. And so I'm happy with that trade, because the first trade is negligible. This trade, it has to get beneath the low of yesterday to get to 1-to-1. But the fact that my initial target is still a little bit lower, if I get into the trade here, as soon as it's moving down, by the time it gets to there, I can pull my stop on that second trade to above here. So I've reduced the risk on that trade. And if this closes as a decent uptrend candle, then I can manage to pull the rest of the stop down. You get that? There is enough room, even if it's just one dramatic breakout, by the time it gets to here, I have enough time to manage my stop for that trade and bring it down. So I jumped into that trade. As soon as it started moving down, I just got in right there, and I managed my trade and pulled both stops down. When we got to the low of yesterday, past the 1-to-1 of the initial candle, and it also got to 1-to-1 on the second one, but I'm more concerned about the initial candle. I pulled my stop to here because this was a bear candle. I was concerned about the tail, because I'm saying, well, if the bears are strong, you've dropped the price, you said it's too expensive, then follow through. But what happened is the bulls came back and say, okay, we lost the battle here, but this valuation is not correct. We cannot let the price go down lower. So the bulls came back in and forcefully revalue the asset. And you can see we're still active, we're still live, waiting to see what takes place. So I pulled my stop to here. And then when we had that bull candle, actually, I was still above that, but I got stopped out immediately, which is perfectly fine. Did I worry about it? I didn't, because our second trade was just at about half, no, 0.5 to 1. The first trade, it got to its 1 to 1. So I got 1 to 1 plus got a little bit extra from the scaling trade. And then we're going sideways. Now I am just waiting to see what happens. Strategy number 2, I'm not talking about that now. But guys, I just really want to, I'm looking forward to talking to you. You know, guys who've worked with me for a bit of time. You're gonna absolutely love the asset valuation zones. You're going to love the filtering out of low probability trades. But more importantly, man, when you see a profit booster set up as it should, you've got to take it high probability. We're talking 70, 80% to get to 1 to 1. All right, guys, I trust you enjoyed that. My name is George. We will catch up again in the AVZ of Trading Coaching Program. Take care, guys. Have an absolutely fantastic rest of the week trading. Bye-bye.